you get confused on where markets would get to when you click on that buy or you click on that sell, then this video is for you. Hey guys, this is Synthetic Goddess, and on this channel, I teach you strategies to trade synthetic indices, even if you are a beginner. If this sounds like something that excites you, then do not forget to hit the subscribe button and join our Telegram channel, link in the description, for more updates about synthetic indices. Let's get straight into what we want to discuss today. Now, you might have heard this phrase: for every effect, there is a cause. For every sales that happens in the market, there is a reason why market sold. For every buy you see in the market, there is something market saw, or there is a cause that made market push in that direction. Now, this concept I want to teach you guys, I learned it from my partner. I'm going to drop his YouTube link in the description for you to watch his YouTube channel also. So I learned it from him, and since then I just decided to test it on synthetic indices. It trades currency pair. I just decided to test it on synthetic indices, and honestly, it has really, really worked. For the past 1 week, that is what I have been using in making my analysis, and it works perfectly. So let's get straight into it, guys. You know, when you want to click a buy and then you are confused on where exactly market will get to, or the take profits market will get to, or you just put your take profits anywhere. Let's take, for instance, you are clicking on buy here, you're clicking on a buy here, and you are putting your take profits here. The first question you want to ask yourself is, why should market get to this particular area? Why should market come back to take this high? That is what you should ask, because for markets to come back to take this high, there must be a cause. There must be something market is coming back to take for market to come back to take this high. And I feel that is a lot of mistake that traders make. Okay, I feel traders make this mistake a lot. They just think, oh, market should come here. They trade what they think. They are not trading what the market is doing. Now, take notes, guys, before I move so far. This concept cannot stand on its own. This concept is not independent. It is dependent on a lot of things. It is dependent on market structure, liquidity, and all other things. So it cannot stand on its own. But I need you to understand this, so that when you see it in the market, you are so confident that yes, market is coming back to this area. So now, if you are clicking on your buy here and you are putting your take profit here, well, the question you should ask yourself is, okay, I'm putting my take profit here. Is it just what I am thinking, or what market is expected to come back to take? Ask yourself that question. Is market expected to come back here? Is there anything market wants to come back to do on this high? That will help you in putting your take profit and not putting take profit at random places. And this is the reason why a lot of traders, they're going to click on buy. Market will move in their direction for a while. It would almost hit TP and it will start pulling back. Why? Because market does not have business taking this high yet. And that is why it is not taking it. Market does not have business. There is no cost. There is no cost for market to take this particular high. And that is why it is not taking it yet. It might just be this high market would come back to take, and it will start pulling down again. You need to know where exactly there is a cause for market to effect into that direction. That is what I am going to be teaching you today. So I took a trade on volatility 75.1s of recent and volatility 15.1s yesterday, but trading view deriv does not have volatility 15.1s. So I'm just going to use any other assets to explain this in a better concept for you. So let me show you volatility 75.1s. If you are buying, you should look at the possible areas where market is going to get to. And if you're selling, you should look at possible areas where market would be buying to. It was a buy setup. Number one, I was seeking to make the buy continuation from here. And there was something I missed out. Remember, I said, for every effect that you see in the market, there is a cause. Now, see what happened there. We had what we call trend line liquidity. If you've not watched my video on the red flags you need to watch out in the market, then you should watch it. See trend line liquidity. This is the cause why market had to come back and break this low. Normally, if there was nothing like this, there's nothing market has to do with taking this low. It would be a change of character for us. But because we have what we call built up liquidity, and that is why markets had to come back to take it before making a continuation to the upside. I was looking forward to buy from here. And you can see that we had that impulse movement. It means that this particular point of interest was really, really valid. It was really valid. Now, why did I want to buy? I knew something was here. See, there's a cause here that would make markets buy no matter how long market has moved. there is a cause here why market has to buy. Even if this high is where I'm going to be placing my final TP, I knew market would come back to take these highs. Why? Because they are weak highs. It is what we call weak highs. Remember I said there's something market is seeking after. If it comes back to that particular area, there's something market is definitely seeking after. That is the same thing that happened here. Why did market break this? It is because we have built up liquidity where market has to take it before making a continuation. Now, just like I said, I was looking for a buy continuation here. That is how a lot of traders are also looking for buy continuation here. And you can see the market pushed in that direction. You can see that there was deep reaction at that particular point of interest, meaning this is market telling you that this particular area is actually valid for buys. It is valid for buys, but because of this thing that we have under, because of this trend line liquidity that we have under, this is just too lows. Okay, this is too lows, and it is what we call trend line liquidity. Because of this trend line liquidity, market has to come back to take that low before making a continuation to the upside. Now, this is another cause. This is why market has to buy. If I had seen this early, okay, if I had seen this early, and I'm seeing this trend line liquidity, for the sales I'm going to be entering here, this low would be my final take profit. Why? Because there is a trend line liquidity. There is a liquidity there. There is a built up liquidity that is the cause of market pulling to the downside. Market pulling to the upside. This is the cause. And you would notice that market took it out. The only thing you're looking out for in the market for a cause is not just trend line liquidity. It might be inducement, okay? It might be fair value gap. It might be liquidity void. Those are the things you are looking forward to the market. Now, you can see that market took it out. Now, for the sell, for market selling here, right? This is what market came back to take. This fair value gap. There's a fair value gap here. See what we had here. We had fair value gap. There's a fair value gap here. The market just has to come back to fill. Market just has to come back to fill that fair value gap. That is why you see market come back to this area before making an impulsive move to the upside. Now, another thing, when you see market pulling to the downside this way, you should not just assume that this is a change of character. See what we have here. You should not just assume that this is a change of character to the downside and market will start selling to the downside. Now, why should market come back to take this high? You can see there are weak eyes. This is what we call weak eyes. See what we have there. It is what we call weak eyes. There is no impulse to the downside right from there. It is just market struggling at that particular area. So when you notice this change of character, you are not automatically saying that, oh, I want to see market pull to the downside or something. No, you just want to see market come back to raid those eyes that are weak. Now, see another thing. We have, it is like equal high, right? So market has to come back to take these highs, and that is why you see this push to the upside. Now, the reason I am explaining this to you is so that you can see why market moves the way it moves. When market takes a particular high or it takes a particular low, you should know that, oh, this is the cause. This is reason why market has to buy. Now, it's not just works for only take profits. For instance, if I am looking forward to sell from here, I just want to make an instance, okay? If I am looking forward to sell from this particular area, I'm going to ask myself, what is the possible thing that can happen for market not to sell at this particular area? What are the possible things that can happen for market not to sell from here? You can see that we have weak eyes. So since there is availability of a weak eye, it is very possible for market to invalidate this, my point of interest. After invalidating it, then it will start moving to the downside. Now, see when we had this change of character, when we had this total change of character to the downside, there was nothing I was expecting market to come back to take on this high. Because sometimes market will take change of character, market will give you a change of character and still come back to do hunt of liquidity. If you are a beginner, don't confuse yourself. Do not confuse yourself so much, okay? Just take it slowly. Just learn basics of trading. We had a change of character to the downside. Now, if I am expecting the market would buy, I am not expecting it to come back to take this high yet. Why? Because we had impulse move. This is a strong high. This is a strong high here. There was no weak high, okay? There was nothing like market struggling before the sell movement. Market gave us a push to the downside, gave us a little bit retracement, then gave us another push to the downside. There was nothing like big high. So I was not expecting market to come back to take this particular high, even if it is going to buy. I am not expecting it yet, since we have a change of character to the downside here. Okay, and you can see how market has been pulling to the downside there. You should ask yourself, if this market is going to buy, where are the possible areas where market would come back to? Okay, my first possible area is this high. This is an inducement for me. I am expecting that even if market is going to buy, it will take this high, but I am not willing to take the risk because this is going to be like 30 minutes retracement, which is not definitely what it's going to give you very little risk to reward. So expecting that market would come back and take this high, which is like a cost. Okay, and sometimes market might decide not to come back to take that high. Now, another thing, why should market sell? Why should market continue the sell movement? Number one, I am seeing this. This is like a relative equal low. So no matter how the buy movement is, if market comes back to take this, I am still expecting market to continue the sell movement. Why? Because of this low. Another thing, see what we had here. We have relative equal lows here. So even if market is going to buy for a while, I know that there is nothing market wants to do. It will come back to take these lows. It can't move impulsively just like that without coming back to take this lows, this equal lows. It's not going to leave it untested. Now let's look at one final asset, volatility 25-1S, and I'm going to show you something on it. All right, so if I am looking forward to sell this market, my first question is going to be, what's the cause of market coming back to sell? Why should market sell? Number one, I have this void that has to be filled. Number two, I am seeing something else. I am seeing trend line liquidity here. These are things that would make this market sell, even if it doesn't want to. So this is liquidity void. It will pull down the market to come back to this area. This is trend line liquidity. I am expecting market to take off the trend line liquidity before making that buy continuation. So when market takes this particular low, you are not just saying this is a change of character and market wants to start, selling impulsively. No, this is a cost that should drive the market to come back to take them, even if market is going to buy. I am expecting market to take this trend line liquidity before that continuation to the upside. I hope you are able to learn one or two things from this video. And do not forget that I said it is not independent. It is also dependent on other stuff. So I just need you to have the knowledge of this, okay? I'm going to see you guys in the next video. Have an amazing trading day, guys.